Hey, my name's James Nicholson and welcome to my YouTube channel. We've got a new market-leading mortgage rate. You see, the Bank of England are expected to cut rates on the 8th of May next week. And because of that, a whole handful of lenders, in fact, tons of lenders, are cutting rates. And a lot of them are going below 4% now. There's a real mortgage price war on. I'm going to tell you who's got the best rate on the market now, the cheapest rate that you can get. So if you're new around here and you haven't done already, make sure you subscribe to the channel over there and hit that bell notification. We've got new property content every single day. We talk house prices, we talk interest rates, we talk property investing and much, much more. And let's get some views on this video. How do we do that, you ask? Simple. Smash like, tickle like, do something to the like button. That really helps with the YouTube algorithm and has helped the channel grow to where we are today. So thanks to everyone that does that. So what is going on? Well, look, the market is getting really, really competitive now, which is what we need to see. You see, last year, the market started off very, very slowly. I'm talking 2024. It wasn't a busy market at all. And then the new government announced that stamp duty would be going up, and that got some momentum going for the market. But not only that, because the market went slow, lenders started to cut rates last summer, if you recall. That stimulated the market more than anything last year, and that's what they're trying to do again, because the first quarter this year was very busy, 500,000 sales. The next 9 months, we're only expecting 500,000 more sales. So that shows us what a slowdown we're going to have. Now, Nationwide did some house price data this week, which you can go and check on what happened there. Hint, it wasn't good. House prices are down. But in that data, they said the next quarter, and so in the next quarter, April, May, June, they're expecting that quarter to be very, very slow. And that's why lenders now are getting a bit more competitive, because they're seeing they're not getting the applications in and they want to get your business. So today we're talking about Halifax, and they've cut rates a few times. Halifax is part of Lloyd's, but they haven't been ultra competitive. And so Halifax also have a house price index, which we like to keep an eye on once a month. We'll probably get some data on that next week. But now they're looking to get more competitive. And this is good, because we know if they go cheapest, what often happens is Nationwide then make one of their brands cheaper. Nationwide have the Virgin Money and Nationwide as a brand, and they're often one of the cheapest. So Halifax have dropped their headline rate. It was at 4.1%, and they've dropped it down to 3.79%. A nice little drop there, and that now for residential is the cheapest rate, meaning you'll get the best monthly payments. Now, there are a few things that they want you to really consider before you apply for this. First off, this is for 2 years or 5 years. So that's good. So that gives us an option, because a lot of lenders have one deal better than the other. But these guys, they've said this will work for 2 or 5 years. Here's where the conditions start coming in. You have to have at least 250k mortgage. 250 grand as a mortgage, meaning you could have £1 million house, but you've got to borrow a minimum of 250 grand. They're not doing this on the smaller stuff. So unfortunately, it won't help many people in the north, but there's a lot of people in the south that could benefit from this deal. Now, loan to value, what are they looking at there? Now, this is one of those ones where they're looking for the best customers for them. And they will only do this for 60% loan to value. So meaning you've got to have 40% equity or 40% deposit to be eligible for this deal. And that's happening with a lot of lenders at the moment. They want the best deals in the market because there is some uncertainty. If house prices go down, do you really want to have lent loads and loads and loads of 95% mortgages? Or would you rather have really fought hard to get loads where you've got 40% equity and your clients are likely to keep up with the payments? That's the difference here. And that's why the best deals are always going to be where you've got a big chunk of equity in your property. it's not likely, and it hasn't happened before, where house prices have gone down 40%. So this really protects them. Now, the fees on this are fairly high. And so the fees on this deal are £1,999. I know some of you are going to go off in the comments on that straight away. But if you look at it and you say, well, it's actually on a bigger loan, so it's better than being one of these percentage deals where you get 2%, 3%. Sometimes 2 years ago, they were at 6% fees I saw, which was absolutely bonkers. So look, this is a higher fee, but the monthly payments are going to be lower. And remember, you can chuck that £1,999 into the debt that you borrow, so you don't actually physically have to pay it up. And in 5 years, inflation will have eroded that £2,000 somewhat. So that's something to consider. Now, if you want to get a lower fee, they have an option for you as well. So all the rest of it's the same, but the rate is going to be higher. The rate goes up to 3.88%, still well below that magic 4% number, which is good to see. And the fees on this higher one are £1,495. So you've got to figure out yourself, does that work for you? Or should you be going with the £2,000 fees for the lower rate and the lower monthly payment? That's what you've got to figure out on the amount that you borrow and do all your calculations. Now, this is good. And I think next week we are going to see the Bank of England cut rates. And it's not going to be massive. I believe that they'll do 0.25%. That's what the Bank of England are kind of hinting at. That's what the markets are expecting as well, 0.25%. And that's why lenders are able to cut now. So they're cutting ahead of time. But I also think that next week, once we do get that cut, you'll also get some more lenders cutting as well. I don't think that you're going to get huge drops. I reckon that you'll start seeing some rates of around 3.75%. I think that will be a good rate right now. Whereas right now you're looking, there's a lot of deals at 3.9, 3.99 and stuff like that. I think they will drop about 0.25%. So that's what I think. What do you think? Do you think there's going to be more cuts next week after the Bank of England cuts? Do comment below. Make sure you smash like on all the videos, guys. I know it's a chore, but it really does help get the views on the channel. And do subscribe if you didn't do already. As you'll see around this video, we're a smidge away from 41,000 subscribers. And check out the fundamentals of property investing in the description. It's less than £30. It will help you source properties. It will help you understand how to do refurbishments. And it will also help you pick a high cash flow strategy. And so you can decide, is it serviced accommodation you want to do, HMOs or something similar to that? That's less than 30 quid, so grab that in the description below. And check out all the other content as well on the channel, including this video right here.